A crazy day on Wall Street. Have a look at the Dow 30 stock average. Doing a very nice 1.25% rise, but just before 3 o'clock, the market was actually down about 400 points from where it is right now. So think about everything that's happened in not quite an hour has happened in that last hour or so. Big, if you will, fourth quarter rally on the part of the Dow 30 stock average. The S&P 500 is up almost a full percentage point, and the NASDAQ is now up about 0.7%. So Wall Street apparently in a fairly jolly mood, if you will, on this election day. We'll see what happens tomorrow after the results, or at least some of them, are in. Historically, in the weeks and even months leading up to midterm elections, investment markets sort of begin to behave strangely. Of course, it is election day today, and that's why we've asked local financial professional Momodou Bojang from Axiom Value to join us to give us his take on why midterm markets are so unusual and maybe how that affects our investing strategy. First of all, it's great to have you with us today.
Good to be here.
Let's talk about leading up to today. The markets have been on a wild swing. The stock markets, for the most part, have been down. Some of the bond markets have also been down, but there have been some investments in bonds that have been terrific. There are lots of different things going on out there. How much of that is sort of market-driven, and how much of that also is dependent on the elections, in your view?
Well, first of all, I would probably say what we're seeing out there in the market has to do with a lot of things. We're dealing with inflation, we're dealing with fear, we're dealing with, obviously, the elections, right? So it's a combination of all those that's actually having an impact on the stock market.
Well, the markets today, by the way, just so that we have a look, the Dow is up a full percentage point, S&P up about 0.2%, and the NASDAQ up about 0.75 of a full percentage point. It's been a pretty good run-up to the election day. What does that tell you, that maybe the markets don't see this as one big win on maybe it's not going to be a sweep for the Republicans, maybe that everybody's going to be able to claim a little bit of victory, and from the investor's perspective, that is better than if there's one winner and one loser?
Yeah, obviously. So from an investor's perspective, at least we can say we're getting a little bit breather, right? So the market has been doing well today, like you mentioned. But I'll probably say elections come and go, right? So market people tend to react to based on election results, right? Whether that's Republican win or whether it's Democratic win. At the end of the day, we have to look at, investing from a long-term perspective, right? So we should not be investing because of the what the election results going to be, but more for the long term.
And spoken like a true investment professional, because it's a fool's errand to try and bet on the future. You have to take into effect the ups and the downs, and we're seeing maybe a little bit of both of those right now. Moving beyond the election, there probably will be some reaction tomorrow and maybe on Thursday as well. But the same market forces are there right now. Inflation in some places, I heard today in Colorado, statewide, inflation there running at 15%. That's a real problem. And it's those kinds of things that are going to be much more of a long-term effect on the markets and the investments than the relatively short-term election. Would you agree?
Absolutely. I think investment strategy is supposed to be based on your appetite for risk, the type of amount of risk that you can take while you're young, whether you're close to retirement, and then be also think about your time horizon. When are you going to be needing this money so that you can fund your retirement needs, right? So you want to make sure that whatever investment decisions that you do will align with your goals, not with what's happening with maybe the elections or what's kind of like new that particular day.
And the other side, too, is that there are opportunities in this sort of uncertainty as well. It's not as if you haul everything out and put it, in under your mattress or in a relatively low percentage paying bank account. There are things that you can do that are safe and that also pay decent rates of return right now.
Yeah, absolutely. I think the worst thing that you could do is just have the fear take over, and then for you to be actually take all your money and then put it into a bank account. Obviously, we need to have money in a bank account, but that's supposed to be your emergency savings. Typically, we'll say about 6 months worth of your major expenses. But apart from that, you want to put that money somewhere else, that have that money go work for you. Over time, we have seen that when you put money into an investment, over time tend to perform better. And these are great time for investors. The stock market is down. Obviously, things are on sale now. So you getting in now, buying things on sale. That will give you a nice run when the market rebounds again.
I think that's a very good way to look at what's going on right now. Momodou Bojang from Axiom Value with some very valuable advice on what to do with your money right now. Many thanks.
Thank you very much.